So as we go live, so we'll be looking at group account and individual form and type. So that's what we're looking at. So, I'd like to start the class now. So I start the class by saying good afternoon, everyone. I believe you are all here with me, listening, and all what we are doing. Please, I would like to say this that why the class has to go electronically is because of what we are having in terms of the we all know what's going on in the country, and we are also following the COVID protocol. Our school, the rule is that the school must be fumigated at least once every month. So we need to fumigate it today so that we can have it on the authority of the government that we are already used, that what we are doing is in line with the protocol. We don't want them to find us and won't be able to use the school. So please, if anybody is finding it difficult to join us, please, we will beg you to just accept what we are doing, and we are trying to make sure that everything works in place. So what I've also done is that the YouTube channel is also something that I'm putting on our platform. So for those that might also want to join the YouTube channel, they can also find it on that platform. For those that might not be able to get in contact with us. So also what I'm trying to let us understand is that if you cannot join the YouTube channel, you are not losing anything. You can watch the YouTube after the class. So please, if you have any question, you can call my attention and I'll listen to you as you move. So a quick one check I would like to ask. I want to know if you are all here and I would like you to do your mic check to know that it's working. Benedict, please can you respond? Benedict Abuja, please unmute your mic and respond. Are we there?
I'm here.
Thank you.
I'm here.
Okay, the
You're
person
welcome.
with iPhone, please, what's your name? Unmute your mic. The brother with iPhone. Lukman, please, are you also there? Kesman Abiodun, are you also there? Taiwo Ujo,
Yes,
please,
sir.
are you also there? Thank you very much, sir. Lukman, please, are you also there? Who are we still having? I think we have everybody set and we are good to go. So what we are starting with today, we also have the YouTube channel, which I've sent to your class. So for those that might want to have any questions. So please, I would like to beg, if you have any questions, you can ask me, and I will also be glad to attend to all your questions. So let's start with what we are having now. I want to quickly do a sound check. I hope everybody can hear me loud and clear. Then if you have any question, you can also raise your hand by using the electronic hand, and I will attend to you. So we are starting with group account. It has become a fundamental thing, and I want you to know that the group account is one of the topics that you get to see in your exam that is very germane and very fundamental. So what I'm going to start with the group account is for us to know what we have. So we are starting with the introduction. I don't know if there's anything you're not saying. I'm going to put them right. So we're starting with the introduction. So for our class day, our introduction to group. And this introduction, I want you to know that we are going to be looking at the standard. What are the specific standards that guide group account? What is all about group? And then we'll look at what are the fundamentals. Today we'll try to get to a point whereby we'll be able to analyze and be able to solve a simple question on group. So let's start with this. When we talk about group, let's take a basic concept. You have an entity. You have this company A, and another company. You have another company. Now, when we talk about the word group, group is not just one person. We're talking about group is a minimum of two people. You can look at it and say, okay, this is a company and that is another company. So when we are talking about group account, what the standard is looking at in terms of group account, and we are looking at is that we are having two companies that they are put together and they will be viewed as one entity. Two companies will be seen as one entity. They are saying that this is one entity, even though there are two companies, but they will be one entity. And something has happened. What is making them look as one entity is that there's one of the entity that would have gained power. We talk about gain power. In looking at that power, we are looking at the easy word we call control. Let's just take all these words in their English form, and as we move ahead, we look at them in what the standard is telling us about them. So, looking at all these, we are saying that we have an entity that have gained control over the other entity. Now, key word is as we move ahead, we are going to ask ourselves, what's the meaning of the word control? And this entity that gained control over the other entity, he has a name. The entity that controls the other entity has its own name, and the entity that is being controlled also has its own name. Generally, let's just look at it in terms of family. If you have somebody that has gone back to someone, you refer to that as what we call parent. And in some other instances, you hear people saying an holding company. It's just a matter of grandmas and that. But the company that is being acquired or the company that is being owned, are you there? From what we are having, the company that is being owned, that is being controlled, is this other entity, and we refer to this other entity as well called subsidiary. So let's just get to learn this, just a simple term, that an entity that controls the other entity is referred to as a what? A parent company. Why that other entity that is being controlled is referred to as what? A subsidiary. So first thing we are learning, that an entity that controls the other entity is referred to as what? A parent. Why the other company that is being controlled is referred to as a what? Subsidiary. Now, having gotten this word, get the key word that we have there. We talk about gain power, and the word of that power underlies control. When you look at control of the entity, there are two fundamental things you see about companies. In companies or entity, you just see, we talk about their management, we talk about their finances, and then we talk about their operation. So, when an entity is being controlled in terms of its management, finance, and operation, then you know that entity is referred to as a subsidiary. And that is the first thing we need to understand. Now, let's just look at entity in terms of their structure. Let's look at entity in terms of their structure. When you have an entity, let's remind ourselves about what we have done when we said that we have asset is equals to capital. Is equals to capital. Then we now move further and say the word asset. There are situations whereby an entity cannot run the company itself. So you have it added to what? Liabilities. Put it somewhere under it. When you look at a company, the structure of a company is made up of its asset. That asset is made up of capital and what? Liability. We can write this by saying that the asset of an entity minus its liabilities equals to its capital. Now, question. The word asset minus liability is also referred to as what called net asset. I want us to have that at the back of our mind. And the word capital is also referred to as what called owner's equity. Owner's what? Equity. And the owner's equity of business, let's look at it. When people talk about owner's equity of any business, they're talking about the word equity and reserve. Equity and what? Reserve. So please, when I'm referring to the owner equity of this business, I'm referring to what we call the equity and what? Reserve. And this is always the fundamental part in your exam. A lot of students don't get to understand this. And when they don't get to understand it, they make a lot of mistakes. And when you make a lot of mistakes with this, it makes you not be able to know what and what you need to do. And if you don't know what and what to do, you don't know where to start from. And people always say, why do I go back to all these basics? It's because the basis of every question you are going to do is your ability to note this. Is your ability to note this. And I always say, please don't think that it's very cheap. Once you don't get this in the exam, you will not know what to do. You will not know what to do. So I advise you get to know this. And I'm repeating this the process so that you guys will get to understand what I'm referring to. Is that the word net asset is asset minus liability and no. So when you are talking about net asset, you are talking about asset minus liability. And why is this? Is that when you need to acquire a business, it is very difficult to start buying all the assets. But you can easily acquire a business by buying its equities, buying its shares, buying the shares of that company, and then you move on to get what you need to understand. So in looking at all those bases, there are things that you need to be very careful about. And I do tell people that all the basis of what you are doing, there are things that you must get to understand that what am I doing? So at this point, I believe that you guys should be able to understand some things I've done here. And I've started good because once you understand these bases, you know where and where you are going. Any question at this point so that I'll move on?
I have none at the moment.
So can we go on, please? Okay. Now, I haven't gotten this. You get to see when they give you question in the exam, the first starting point will always be the balance sheet. Sorry, statement of financial position. Because this in Nigeria, we use that, but for myself, CPA student, we use balance sheet. So let's get this. I haven't gotten all these fundamentals now. We now know where we are going. Now we have gotten this. Let's go to another thing. We now want to look at what we call entities. Are we there now? Equity of entity. When you talk about companies, how do you value companies? Value a company or valuation of companies are always seen in form of their shares. Please note that the shares are divided into two. We have ordinary shares and preference shares. Now, what I want to draw your attention is the ordinary share also refers to as well called the voting share. Note that the preference share is also seen as debt equity. Now, we are not looking at this, but I want us to pay more attention to the issue of ordinary share. One, and I want you to have back of them, is that shares are always looked at from of their units basis. So when you are looking at shares and you want to buy any share, you look at them in form of their unit basis. Then two, they have what we call the voting right. That is it. So shares and vote. Then three, we also look at them in terms of their values. So let's take for example, if I say that company A has what we call 100,000 shares, and you are told maybe in case one, you have it to be 1 naira per share. So if I'm asking, how many unit shares do you think we have to have? How many units? The company will have 100 units. Because you are saying that for one share is 1 naira. But you are told that the share is 50 kobo per share. Class, I need your how many units of share will that company says it possess? I need answers here. How many units of shares? I will do. Modupe, how many units of shares?
200,000. 200,000.
Thank you, Modupe. You said 200,000. But if you just
Yes,
200,000, I'm going to get the answer. The answer is 200,000 units. Are you there, Modupe?
Okay. All right.
So we're having 200,000 units. And please, why I want you to be very careful in mentioning all these things is because if you don't get them right now and give us the right answer about the numbers of units that you have, you might not be able to give the right answer when the exam comes. So please use the right adage because you might need all those adages to have what we have. So we have 200,000 units. So you also remember that. Now, all what I'm doing is for you to be able to remember all the bases of what you are going to get to. And when we get to those things, you will not make any mistake. Now, we started in this class by saying that we have shares in terms of what we have and all in terms of equity. Now, let's go to another one that we also need to look at. We are going to focus on, let's say we have here a company and it has what we call units of shares. And please focusing on what we call ordinary shares. Note that these ordinary shares can also be looked at in terms of portion, in terms of what we call proportion. And when I say portion, the whole amount of any shares of any company is 100%. Is what class? 100%. So what another person buying from it will be part. And there are many ways in which when you are talking about them acquisition, you're going to buy parts. It's either buy parts or you decide to acquire the whole. Then if you are saying oh, you have that. And please, I'm saying this, you will see that we are in a proportion. So in this case, as you move ahead, you might not see us operating in unit again. Then what you'll be seeing us operating is in percentage. So what do we now say? Is that if you have a company, you have a company, you have a company A, I have a company B. Company A decided to buy into company A. The company A decided to buy into company B. If you look at what I'm doing in my house, I point that out to B. It means that A is going into B. Are we getting that now? It means that A is going into what? Is going into B. And what is A buying? It's a matter of percentage. So the question you are going to do now, if you look at what I'm doing, I'm not using any term. We are not going into standard, but we are looking at, so let's say A has to come 100% a share of one share on capital. B saying, I want to buy out of shares. When he's buying out of it, it means that he wants to be part owner of this company B. And the proportion of whatever he's buying is what will determine his structure. Is the what will determine, okay, what is the level of A? If A comes to B and said, I want to buy the entire shares, then you should know that B be a full subject owned by what? A. So now let's start using terms and we'll start going there. Now we'll be looking at some terms and I want us to be very careful. And those terms are very, very simple. I want us to see. We'll be looking at what we call percentage holding. We have all agreed that a company full percentage is 100%. If you have a company standing somewhere deciding that, come, I want to acquire this business, and he decided to acquire above, I would like to from this, he decided to acquire all 100% of another company. This is company. Another company, let's say a company, and he decided to acquire the whole company. It means the whole percentage of the company, which is ordinary share capital. Something will happen between them. This thing which is acquiring, I'm going to be there and I'll call him investor. We'll see him as a parent. And the company that he is acquiring, which is called the investee, will now be described as what a subsidiary. Now be described as a what? Subsidiary. And in that case, something now exists between them. The right word is what we call control. What is now the criteria of exists between them of this criteria? Is now what control. Do we get that? Next, if it's equally buying what we call above, if it's equally buying what we call above 50%, are you there now? 50% of ordinary share capital. If who is the investor is also referred to as the parent, and the person that he is acquiring is referred to as the what? A subsidiary. And what exists between them is also called what?
Control.
Taiwo, any question? Hello, Taiwo. Do you have any question? Taiwo, I can't hear you. Do you have any question? Okay, if there's no question, let's move ahead. Taiwo, do you have any question for me? Okay, Taiwo don't have any question. So let's go ahead. Now, what now happens?
No, sir, I'm fine. I'm fine. Not to
An
this
item of Taiwo, do you have any question? Hello, Taiwo.
No, I don't have. No.
Do you have any question? No. Okay, let's go ahead. So in this case, what now happens? There's another situation. You have an entity acquiring from 20%. Are you now? But before we get 20%, I want to also see there will be a situation of work of 50 equals 50% buying in ordinary shares. In that case, I want you to know we're not going to have parent situation. We are going to have what called a joint arrangement. A joint what? Arrangement. And all these things, I'm going to tell you how the standards affect them. For this one that we are talking about, you will see situation of what IFRS 10 will come. This is what I will call IFRS 10. But when it comes to an arrangement, you will see situation of IFRS 11. That is when you talk about joint situation. Then what happens? What we call above 20%, but below 50%. Now, be very careful under this situation. This one, you are not going to have a situation whereby the transactions will be based on any of what we have above. You are not going to have a situation where you have an investor. The investor is the one who is acquiring, which you can also call the acquirer. Now, the company that is acquiring, which is now the investee, that means the company that is being acquired, because it's not up to 50%, such company will be referred to as what we call associate company, associate. And we will see that exists between them is what we call significant influence. Significant influence. So this is not a control. You are rather you'll be having what we call significant influence. And under this, you'll be us making use of what we call AS28. So looking at what we have just done now, we've decided to make ourselves remember the following: that a company is valued in terms of what? Percentage. A company is valued in terms of its percentage, 100%. When that company that you are talking about, you are having another company acquire 100% of that company. The main company that have acquired is corporate, and the company who has been acquired, that means the company that they bought all the shares, is going to be referred to as subsidiary. And that we are going to say. And please underline the fact, you will see that what we are referring to here is the ordinary share, not preference shares, because that is the shares that you have as voting power and as the right of the organization. Now, I'll quickly give you a class work, and I want you to give me your answer. So I'm going to give you some scenario, and you will tell me what plays out in that scenario. So we will now move straight into the question. We have, for example, let me use someone's name in it. We have Taiwo. We then acquired the following entities. Are you there now? So let's see the first company that he acquired. We have number one. He acquired Ojo Limited, and he bought 60% ordinary share of Ojo. Number two, he acquired Hear me, see, Limited, and he bought 40% ordinary share of EMC. Then number 3, he acquired Emmanuel. Let's say he acquired Bamidele Limited, and he bought 80% of preference share of Bamidele. So let's start. Number 1, what is the relationship between him? So this company number 1, I want you to tell me, what is Ojo to Taiwo Co? Is it a subsidiary, an associate, or no relationship? So please give me an answer. Can I get your answers, please? Unmute your mic and give me your answer.
It's a subsidiary.
Okay, number 1, Taiwo, you said subsidiary for Ojo. For Yemisi, what do we have?
Yes, sir.
How about for Yemisi? Oh yeah, Taiwo, I'm listening.
Okay, Yemisi is just like there's no control.
An associate.
What did you say?
For MEC, it's an associate company.
Is just like an associate.
Okay, it's not like, please, I want you to be very bold. It's not like it is an associate. Now, when you are saying it's like maybe you are doubting, you must be able to give the answer. And then, now, you must be able to say, okay, this is the right answer, and this is the are you getting that? Any question? So if there's no question, so we have here for
Bamidele, what is it for Bamidele that has 80% preference shares?
what is it? This is what associate. But this is preference shares. There's no relationship at all. What you will just be is that for preference shares, you treat it like it's not investment. Are we there? Like it's normal, simple investment where you will be entitled to what?
Okay, sir.
Is preference shares dividend. You'll be entitled to preference share dividend. So there's nothing like all these relationships are not there. So we'll just be entitled to preference share. So having been able to establish this, I want you to now see that everything we are doing is very simple. So we are going to make some notes, and I want us to get those notes in done. So you remember we have written some of the terms as been this, and I've mentioned some terms there. I've mentioned terms such as what? Ordinary shares, units of shares. I have also mentioned terms like what we talk about ordinary shares in terms of voting power. And I've also mentioned the word in terms of what we call ownership, which capital net asset. Then I have also mentioned the term for what we control. So what we'll be looking at now at this point and at this juncture is our ability to now be able to define all those terms. And we are going to define them accordingly. So let's get to work. So the first thing we are going to learn, and which I want you to note, is that we've been able to talk about what we call group and as a move. But I don't know if you guys can make some jotting, and then we'll get those jotting today. And what I have, you can ask them to. So let's see, what are standards? What are those standards that are applicable to group account? What are standards applicable to group account? So what are the standards applicable? I think let me write it so that you will. So what are the standards? So look at them applicable to group account. So let's take them one more. The first standard we'll be looking at is the IFRS 3, and that is our business combination. Then next, we'll be looking at what we call IFR 10. And don't forget that we'll be looking at is called the consolidation financial statement. Are you there now? Consolidated financial statement. So the next one will be looking at what we call as IFRS 11, which is what we refer to as joint arrangement. Then IFRS 12. And these I always tell my students that IFRS 12 is not something that it stands alone. It is something that complements 10 and 11, because if you check your IFRS 10 and 11, you are not going to see anything that has to do with what we call their disclosure, but you're going to see that in IFRS 12, and that is where we have disclosure, or with the disclosure of interest in other entities, So these standards we are going to have. And what I always do is to explain to students that all these standards are fundamental to what we do in group. Now, it has been in practice that people will always say, I can't do ask for theories, but please, you might be asked to label any of these and you might be asked some content in them. And some of those things I want us to get to see is something that I'm going to mention, and as we move ahead, we get to see them. So one that I'm going to really dwell on is IFRS 10. I'm going to dwell on IFRS 10. And what is IFRS 10 talking about? I want us to be very careful. IFRS 10 is underlining the part of what consolidated financial statement. Consolidated financial statement. And please mention the word financial statement. I want us to get to understand the word financial statement here, and who will be paying attention to consists of one. We look at what we call the statement of financial position. Then next we look at what the statement of profit or loss. Then we'll look at what we call the statement of cash flow. Now for our overhead level, we'll be looking at these two in terms of consolidation. Or by grace, when you get to professional, you see that we'll move to cash flow. For your level now, the cash flow you'll be looking at is the one normally for the organization and which is not consolidated. Now, having looked at that, what are those main points we need to understand under IFRS 10? The two words that we're going to understand here is the word right. Under IFRS 10, we are made to understand that when organizations have gained control, like what we have seen here in the other slide I gave to you, organization gain control once he has acquired above 50%. Once you acquire above what? 50%. Once you have acquired at 50%, you are looking at this in terms of control. And once you have gained control, there are things that are features that organization will start having. And those fundamental things, number one, is what we call the rights. And I want us to know that rights are either individual or in combination. And that right, which we are looking at, the right that gives investor power. Give investor power. I want you to get that word. And that power is underlined on the fact that it is control. And what are those rights that we need to understand? Because please, in your exam, you might be asked, what are those rights that could be seen or that could be said that a parent company or an holding company can exercise? Is number one. We have the first one, we call it substantive rights. substantive right. That is the first right you are looking at. We call it substantive right. The next power that you also talk about, you can also talk about what we call the voting right. You also look at what we call the voting right. So you can also exercise the voting right. So that is what I'm saying. I'll have to write this so you can see clearly. You also exercise what we call the voting. My board. Just give me 1 minute. I think my electronic board. I have to get my electronic board ready. Please, I'm with you. The electronic board is decided to play his own funny game today. So please, I'm coming. So I have to get the electronic board. I'm with you all. So what we also look at is the right. And the right, I think you can all hear me, please. Can you hear me, please?
Yes, sir.
Okay. So what we are doing is that we also underline the word the right. Pardon, technology and all the rest. My electronic board thought it is somebody else that is communicating with him. So he decided to do something funny. So pardon me. I have to set him up. So please. So I think we are still on the page of what we are having. So pardon me, I'm with you. I think somebody is trying to come in also. Lukman. So I have it done in right sciences and all the rest. Just give me 2 minutes. My electronic board is thinking somebody is trying to come in, and he decided to play his own. So 1 minute, please. 81808. So okay, from that, I also talk about the rights, like what I've said earlier, is that we also have rights. And in looking at the rights, I've been able to explain to us that the rights are as follows. You have them in terms of the rights that has to do with what we call the rights that is done by the organization, because the rights can also have its own fundamentals. And as he has his own fundamentals, there are things that we have to put in place to make sure that the rights in any organization is not jeopardized by another person's rights. So what we'll be looking at now is now for us to look at what are those bases that we need to put into consideration when we are preparing our group account. So please, let's join in looking at what are those things that you have to do, that you have to put into consideration when we are preparing our group account. So,
But sir, I'm not able to see the board.
okay, the board is going to be active now. I don't know. Technology in terms of the board is moving. Okay, you should be able to see the board now. So, in looking at it, the board is being
I
set up.
don't see the board too.
I'm on it. Pardon the board. I'm having electronic Okay, I think you can hear me now. Is echoing. Okay, I think we are all together now. So let me go back to the board. So are you with me? So from where we stopped the last time, I think we can all see the board now. Can we all see the board?
Okay, I can see it now. I can see it now.
Okay,
Yes,
so
I can also see it, sir.
okay, thank you. So what we also are is that we've been able to also analyze why I went off then was here. So before the inverter picked up. So now we have also gotten to all these points, and I think we also explained what we call the voting and all the rest. So let's now move into some fundamental things that we also see. I think I've explained the right, and I told us that the right has to do with voting right, where we look at it in terms of the voting right the organizations can also look at. Now, please, what I also want you to note is that when you are looking at this right, the fundamental line that we're having here, what this control, and the word control is what you are going to see as you move ahead, as you are solving this question that it is one of those fundamentals that we must not make mistakes with, and we will need to look at. So, okay, let's consider what do we understand by the following words. So I'm going to take these following words, we define them, then I now move on. The first one is what we call parent. What is parent? When you hear the word parent, what do you understand by the word parent?
Yeah.
What do you understand?
Excuse me.
Pardon?
Hello? Excuse me. I have a question. Yeah. Before you move on, I know you were trying to tell us on the things to put into consideration when preparing group account.
Yes.
I think that was the area you were before you start having a network issue.
Okay. Yeah, but I wouldn't want to start preparing account. I want you to understand all the terms so that when we start preparing software, because that one will go straight into the cell. So I would have done all my so you know all the terms, you know everything. So we now look at the 5 steps that we have to consider. So can we move on now, please? So we are going to
Okay, yes,
understand term, subsidiary, and word control. So I always start with the word control. What's the meaning of the word control? We are saying that an entity controls an investee when the investor is exposed to some rights. Get the word. Say control. Are we there? Exists when the investor, are you there now? The investor is exposed to the right. Is exposed to the right. Are you there? And variable returns of the investee. So get the keyword. Controls exist when the investor is exposed to the rights and variable returns of the investee. So whereby you have a parent company, you have an entity that has that. So that is what when you have an entity that has what we call right, and it also enjoys variable returns from another entity, you can say that control exists. So that is that. Then number next that we now need to understand is what is this control that we are saying? Another indication is that we talk about control. Control also be by saying where an entity, are you there, has power over another entity, has power over another what? Entity. So if you have power over another entity, the word key here is power. So that is what we'll talk about word control. Now, what is not the word power? When you talk about power, you are talking about existing right to, are you there now? Determine to directly direct the management, financial and operational activities of another entity. So we see that power. We say power is actually a situation whereby there is an existing right to direct, get the word, to direct the management, financial, and operational activities of another entity. So that is when you start saying that this organization has what we call power. Now, having said this, what is not the meaning of parent and subsidiary? Parent, simple, you just say entity that control another entity. Shikeno. Why is not subsidiary? An entity that is controlled. Now, please, why I paid attention to this is that before we would have just said, okay, there's no big wahala with this one. But with the new standard and everywhere your exam is going now, please note very well, you might be asked to explain this following. And you might be asked, what are now the conditions for power? What gives you that conditions for power? You get the keyword right. Maybe you have the right to appoint an entity director, the right to appoint the key management personnel. And please note that very well, because this is a past question in one of the exams. Not hand, but you have it in one of the exams and you might be asked, what are the conditions for power? Power status. What are those things that you see that will let you say that this organization have power over the other thing? You can have the number one, I would say right to appoint. You can have that right to appoint, to reassign. Are you there? Or remove key management personnel. So you have the key management personnel. So that is the first thing. So, but in your exam, you might not need to write all these three in one. Write appoint key personnel, or you can say the right to reassign the key management personnel or that. And if you are going to be asked such in the exam, you might be asked to mention 5. So, and I want you to know, please, you can mention that. What is another thing that you can see? So you look at that, who can direct? You also have another one that I want you to know. You can also talk about the right to appoint or remove another entity that direct the relevant activity. So in case you didn't hear what I said, let me write it out. Right to appoint or remove another entity that direct the relevant activity. So it's like, for example, you decide to buy into a company and you can tell them, guy, I don't want this other person, and you can remove the person. So that is telling you that there's power. And at the end of this portion, I'm going to mention something which you guys might have to pay attention to. It looks somehow controversial, but it's the right thing. And I always tell people to have that. You also have this, you also have what called the right to direct the investee to enter into or go or veto changes to transactions or veto changes to transactions for the benefit of the investor. Now, let me quickly call your attention to something. I don't know if you guys have been listening to the news or watching the news. There's this popular pharmaceutical company in Lagos, I think X Plus, that you just saw that some people who are called the venture capital have been able to now say this is what they want, and they came up to do something. Although full detail of that is still coming up. So please note what it's all about there. Then the other one we say other rights, such as specified in a management contract. I would like to call your attention to this more again. There are sometimes that an organization will not have above 50%, but you will see that all what we have here as power, status, condition, the organization will have them. And you will still be told that they expect control. Because when you are talking about control, the first point of line is for you to have what we call share. But there are also conditions for power status, and that's why we're having here. We have said that that power brings up what we call existing rights. Now, what are those rights? If you have an entity who has the right to appoint the key management personnel, it means it's exercising control. If you also have the right to remove or reassign this key management personnel, you also talk about him having what we call power. If you also talk about the right to appoint or remove another entity that direct the relevant, you also mean that is having power. So all these are what I want us to put at the back of our mind. And please, I have written this out, and I always tell my students, that's why I'm writing it in gold, and I'll write it in gold for you. This is the 5 marks question. 5 marks and get your 5 marks. You only need 50% to pass ICANN. So just get your 5 marks and drop ICANN marks. And that is what we have there. Now, in going on, let's quickly move. I've always heard a lot of students come up and said, at what time can you say in a group count you must not consolidate? Please note, and I'm saying this, we are looking at conditions for consolidation. Condition for consolidation. And the major condition for consolidation, I would say, according to IFRS 10. When you're talking according to IFRS 10, the condition for consolidation, is when control exists. When control exists. Please note very well and note very well that the only condition, only condition for you to consolidate under IFRS 10 is when control exists. However, I am not oblivious of the fact that we also have karma. And we have to say this, it is karma, it is Nigeria legislation. Are you there? That says that conditions for consolidation have one, which can have, that's what we call exclusion, and 2, we have what we call exemption. Please, this is in line with karma, and now there's even karma 2020. And what is that saying? Although, but please, for your exam, IFRS 10 is the supreme item. And please, IFRS 10 is the supreme item. So when you get IFRS 10, there's nothing like saying that you cannot consolidate. The only time you will not consolidate any organization is only and if only control has been lost. So if control has not been lost, it means you must consolidate. Even if the subsidiary is losing all the money, the rule is that you must consolidate. Even if the subsidiary transaction is not similar with the parent, you must consolidate. Please and please. There's nothing like exception when it comes to IFRS 10. You must consolidate. Any question at this point before we move to procedure for consolidation? Please, any question? there's no question, so we can move ahead. I'm listening. Do we have any questions? Any question? Please unmute your mic and speak to me. Do you have any questions?
I don't have any as of now. Still listening.
Yeah, I have a
Thank
question.
you, sir.
Okay, Mr.
Okay,
Taiwo.
sir. Okay, sir. My question is that you were saying that before an entity can gain control over another entity, it must possess 50% or greater share, as in the share of the subsidiary, right? Now, when you are now giving us the conditions, now my question is that is it possible for an entity to appoint or reassign or remove key management personnel without having that 50%? And can we say so in that situation there is a control?
Thank you very much. Thank you, Taiwo. I want you to also know something. Is that yes, it can happen, and we call that what we call de facto control. And you can
Okay.
see that when I was explaining to you power, you see that I said there's something that will happen, and a lot of students, you see, when people go and then they come and all the rest. That was why when I was explaining control to you, I also want to get to that point. You see, I said this control must exist. But there's also one thing that we call de facto. I think I would like to stop it at this PowerPoint, this power here. There's what we call de facto.
Okay.
Are you there now? We call it
Okay.
de facto control. And this is what the standard said about de facto control. Power without a majority of the voting right. Are you getting that now?
Okay.
So I think there are some situations. Your question have led to something I'm going to now stress it. Please, in line with IFRS 10, there's what we call de facto. I will call it de facto control. And what de facto control is about, we are saying power. Are we there? Without a majority, without a majority voting right. Are you there? And this will occur where following exists. I mean, you can see what I was explaining to you. A lot of people say 50%. No, there's sometimes if organization don't have majority of, and these other things are there. That means there's a de facto. Number one, when you talk about relevant activities, they are directed by arrangement. And I want you to get the statement of arrangement L. Can you see? Underline the first word, the main word here. By what? Arrangement L. You know, because it does not have the control, but it can direct relevant activity directed by an arrangement L. That means maybe you will go and meet some other people and say, okay, let us be the one to do that. Number two. Are you there now? Number two, if you talk about contractual, and this one now, we also talk about contractual, are we there now? Arrangement. I also want you to get that word. Arrangement with other votes holder exist. Get the word again. What's the word again, Mr. Taiwo? Arrangement, contractual arrangement
Arrangement,
with
yes,
other
sir.
words. So you know
Other
it does not have that control. Like for example, maybe Mr. Shezon has 40% in company A, and you have 30. You know, two of you does not have control on that company individually. But if two of you come up with an arrangement, maybe Shezon and Taiwo, cool. You now decided to come up with an arrangement. You have that power. Are we there now? Are you there now? And again, there's the third one. This one now has nothing like to do with arrangement, but see what the word and do it to the standard talk about. Talk about investor. There now as practical. Are we there now? It's a practical ability. And I want you to get where I'm underlining. Practical ability to unilaterally. Are you there now? Direct relevant activities. And now we need to get the keyword. Get this word and let's understand it. They say when investor has what? Practical ability to what? You
So
can
in
look at
lateral
this, you are saying,
direct.
now, let's look at this. You own a you bought into a company 40 30%. And when that company needs money in terms of direction, maybe they need money, and you are the one that you are giving all the money for expansion. Don't forget how many units of share, how many percentage you have? 30.
30 years.
But practically, in terms of running the business, you unilaterally fund the business. Bro, who has the control?
Me.
But I want you to know the control that you have, the name is called de facto control.
Control.
Give you that
Okay, so
to make it explainable. Who is the president of Nigeria?
Buhari.
Buhari. But according to the
Yes, sir.
people crack joke, they will say there's a cabal. So who is the people that is actually running? Will it be the president or the cabal?
The Kaba. The Kaba.
That's what they will say. Not us saying it. That's what they say.
I'm not on this platform.
Not on this platform. Sorry. So we can use an example, and you can see. For example, now in the house, you are seeing that in a company, you are seeing whereby when the MD have to make decisions, they have to consult one person who is the junior officer, and that. Some of us in Christianity will say it's favor. We should all know that that guy, since everybody knows that it's the one that the MD always goes to, before they give suggestions to the MD, who do you think they'll go and meet? They'll go and meet. I'm listening, Mr. Taiwo. Who would they go and meet?
Yes, sir.
So that is that. So okay, let's now move very fast. So let's now go to this one now. I want you to take down. You are writing procedures for consolidation. What are the procedures? Procedures for consolidation. And please, the consolidation I'm referring to now is the one that relates to what for statement of financial position. Statement of financial position. So what are the procedures? And I want you to know there are 5 steps you'll be looking for. 1, 2, 3, 4, and 5. So we write. Let's take them one by one. And after taking them one by one, we'll explain them as we go. So the first thing you have to do when you are solving any question on consolidated financial statement, the first thing you need to learn, and which you have to do, of course, determination of group structure. Determination of what? Group structure.
Yes, sir.
I believe you all get that. That is the first step.
Yes, sir.
Number 2, you talk about what called determination. Or what call the net asset of the subsidiary. The net asset of whom? Of the subsidiary. That is the second one. Then the third one, we now talk about what we call the determination of goodwill. And what we call gain on bargain purchase. That is the third one. Then the fourth one, we talk about determination of what we call non-controlling interest. And we are going to be looking at that more. The word non-controlling interest, I will talk about that. Then the last one, we talk about what we call determination of group retained earnings. What's the fifth one? Determination of what class? Group retained earnings. Okay, those are the 5 steps that we'll be looking at. So when you are given any question, those are those 5 steps that you have to look at. Now, as we move ahead, I have to do something for you. And you guys are going to see what I'm going to do is that how is the exam structure always like? And I have always been doing this because a lot of students are always running for things and I don't know why. So let me quickly do something. Are you done with what's on the board or you want me to go on? Can I move on? Okay. I'm moving. Now I want to do what we call a sample of our exam question. Let's say we are asked to do exam question, and this is what we'll do like. Let's see a question. I'll formulate one myself. So let me just formulate one. And in this case, I might have to use these names. So I'll come here and say Modupe Co acquired with the 80% of Ojo Co on 1 January 2014. Are you there? When they retained earnings of Ojo Co was 15,000 naira. Then now statement of financial position.
Hello, please, I can barely see your writing. No.
Pardon me, I might have to increase it. Sorry, Mrs. Modupe. I start again. Modupe Co agrees 80% of Ojo. They acquire 80% of Ojo Co on 1 January 2014. When the retained earning of Ojo Co was 15,000. So we now have statement of financial position as at 31/12/2018. Okay. So we have what called Modupe. We have what called Ojo. I have Naira here. I have Naira. Then now what called non-current assets. I have it here. Let's have TP. Then I have our current asset. So we have what we call inventory. We have the inventory. I have cash. Then likely I have what we call receivables. So what I'm having here could also be down. I have what we call equity and liability. So the equity liability, we still have the two entities, Modupe and Ojo. Then we have what we call the share capital. We have what we call the retained earnings. Mrs. Modupe, are you with me, ma? Retained earnings.
Yes, I am.
Ma, thank you, ma. We now have what we call the non-current liabilities. Here I have loan. Then I have what we call my current liabilities. And I have maybe payables. And that ends it. And then the examiner will tell me that there's what we call additional information. So in this additional information, I'll just have one non-controlling interest. And I'll just say maybe that's going to be, let's work in millions so it to make our job easier. So we won't have a lot of figures written out. I have down to be 20 20 million. Okay, let's attach up to this. This is 100, this is 80, this is 30, this is 40, and this is 10. So I think that gives me, that is 50, that is 180. Am I correct? So here I have 10, I have 15, I have 125. So what is the addition of that? 125 plus 15. I 30, 140, 150. So I have this to be 30. So here I have 10, I have 5, and I have 15. So that gives me this 20, 100, 110. So here I have 70, and I have 8, I have 12. So this is 20, 90, 90. So I have 20. So this is 110, and this is 180. Now, class, this is a typical example of the exam. A typical example of your work in the exam. And being a typical example of the exam, what are those things that we need to learn? Because there are things that you have to put at the back of your mind. And a lot of you don't know what we are saying. But please don't forget where we are coming from. We have been told that these are the 5 steps that we have to consider when we are preparing group accounts. These are the 5 steps. For these 5 steps, we need to be able to know what it is. So when we are preparing accounts, our question is always divided into 3 segments. The first segment we have here called the preamble. It's called the work class, the preamble. What are the information that I'll see in the preamble we get to learn? Then we now have the second segment, which is the questions body. I'll quickly have to do something. This is the normal record, but I will have to add something. I'll just investment in Ojo. And the investment in Ojo, I'm going to put 20. So that will change this to 200. And let me tell you the fact, this is how your exams are being set. So people should not just say, they just build on it. So to make this 100, this one became 30. So what I'm going to now have is 200. I'll read it now. So that is what we have. Now, if you look at what we have here, please be very careful. Don't let anybody confuse you. We also have the last part. This is the third part, and this is the second part. I'll read it now. This is the first part. So when you are given questions, you must know all these segments. What are you looking for in this segment? And I'm going to ask that question. So please, I want everybody to unmute the mic, and then you'll be giving me answer.
Sorry, please, can you recap? I lost connection.
Okay, Modupe, we said this is your question.
Hello, please, can you recap?
This is a sample of your exam question. So you have this first part that I have written here to be your preamble. And you have all the ones that you have them in keywords, statement of financial position, to this where you have all the then you have additional information. Everybody will contribute. I want you to read this question, and I have these 3 questions that I will read. Modupe Co. acquire 80% of Olo on 1 January 2014. Question we have. This is Modupe Co. Who is Modupe Co in this information, and who is Ojo?
Okay, Modupe Co is the holding company or the parent company.
Okay,
While Ojo is
Modupe Co holding company, and who is Ojo?
Ojo is a subsidiary.
How do you know that Modupe is the holding company or parent company?
It's from the statement, sir. It's from the statement that Modupe Co acquired 80%
She
of
acquired
Ojo.
80%.
Okay, they didn't tell us.
The examiner will be very clear, and you are correct. Modupe Co acquired. Whoever acquired is the parent. And in this case, before you call it parents, I thought that you guys would have paid attention to the percentage that was bought.
Okay,
what
sir.
is the percentage that was bought? how many? 80%. And does that 80% give Modupeko power or control?
It gives control.
So once it gives
Yes, it
control,
does give power of control. It does.
so because it gives Modupeko control, so that is why we are saying that Modupeko is a what? Is a parent. Are we there now? If it does not give Modupeko the power, then we cannot call it a parent company. Any other question? So now let's go on. What is 1st January 2014 called? What are we going to call that? What is January 2014? What is it going to be called? I'm listening. Unmute your mic. Taiwo and Co. Okay, if you don't know, I will explain. 1st of January 2014 is referred to as well for date of acquisition. We call
Okay.
it the date of acquisition. Are we
Okay.
getting that? And on
Yes,
that
sir.
date, we are made to understand that the retained earnings on that day is called how much? 15 million. So
15 million.
so please, when you are reading your yes, Modupe, are you with me now? When you are reading your question, I want you to know that you must know where those terms are and you must know where to feed them. Because if you don't know where to feed them, you don't know that. So Modupe Co is the holding company, Ojo is the subsidiary. The percentage bought is what? 80%. And the date of acquisition is what? 1st of what? January
1st of January
2014.
2014.
And yes, what's the retain on that date? The retain any on that date was 15 million. Are we together? 15 million. So let's have
15
Pardon? 15 million. Do we get that? So let's now move to the next item. We are now told statement of financial position. Of financial position. Statement of financial position. They are there and there. The statement of financial position as at 31 December 2018. This 31 December 2018, what is it for? Class, you know that this is referred to as what called the date of consolidation. The date of what, class?
consolidation.
Or we refer to it as what called what? Reporting date. So 31 December 2018 your exam question. And in your question, the date that is being given to you, that date which you have been given as the statement of financial position is referred to as your date of what? Reporting. It's referred to as your date of what? Reporting.
Consolidation.
Any other question? Okay. Or we call it date of consolidation. Now, going through the question, there's some items you have to pay attention to. Look at this. Investment in what? Ojo. That investment in Ojo represents the amount that is being paid in order to acquire Ojo. Represents the amount that is being what class paid in order to acquire Ojo. Can you get that, please? Represents the amount that is
Yes, sir.
in order to acquire Ojo. Now, every other thing in this account, I will not say until when we get to another point. Then we now have additional information. In this additional information, they gave us information relating to the word non-controlling interest. And what do you mean by non-controlling interest? You'll get that when we move to the next slide. Okay, at this point, I want to give you a recap. Please, what is the date of acquisition for the company? Answer. What's
The date of
acquisition
acquisition
for this company, please?
is on the 1st of January 2014.
Date. What is the reporting date?
Okay, the reporting date. The reporting date is 31st of December 2018.
Correct. Who is the parent?
The parent is Modupe Co.
Who is the subsidiary?
Zola is Ojo Co.
Ojo subsidiary.
What is the retained earning on the date of acquisition?
The retained earning is 15 million.
15%, 15 million.
Okay. What was the amount that Modupeko paid in order to acquire Ojo?
That's 20 million.
Okay. What is the amount?
20 million.
Okay. What is the amount that was paid by the NCI in order to also acquire his own interest?
That's 20 million as well.
20 million as well.
10 over 10, guys. So we are now. So if I give you a question and I said, please state all these following items, you should be able to say them. So in that case, let's now go back to where we stopped. We said determination of group work group structure. So what is group structure? When you talk about the word group structure, what are we relating to? Talk about the word group structure. What is the meaning of the word group structure? Now, know very well. No examiner will ask you what is the meaning of group structure, but it's something that has to be, and please, it will be part of your solution, but it's of so many things that work with. Group structure is a graphical representation of what the relationship between the parents, are you there now, and the subsidiary. Between the parents and the what? Subsidiary. And when I say graphical representation, you can see you have X percentage. This percentage represents the percentage holding. Represent the what? Percentage holding. And when you're in your group structure, it is likely to put the date of acquisition. And whereby the salary is not fully open, you let us know what is the percentage of what of the NCI. So this is your first class work. Everybody, please study this group structure, and I'm going to give you a class work now. Have you studied? Okay. Modupe and Ojo, I want to draw the group structure. Oh yeah, please draw the group structure for Modupe and Ojo. Yeah, we have 2 minutes. Draw the group structure for Modupe and Ojo.
Control.
Are you two?
Okay, sir.
So you have done your own. I'm going to draw my own. I'm not there to mark your work. So I said group structure for Modupe and Ojo. So I will start. The parent is called Modupe. And that means the parent is applying the subsidiary for what? Ojo. What is the percentage holding that Modupe have? 80%.
80%.
Yes. What is the date of acquisition? 1st of January 20%. Is there an NCI? Yes or no? What
Yes,
is
there is an NCI.
percentage?
20%.
Yes. If Modupe 80% in Ojo, so it means the NCI will have work out 20%. Did you draw your own like that? I agree that you are, but if you don't, please correct your question. Your solution. Any other question? Okay.
Yeah, so I have a question. Yeah?
Yes.
Yeah, I have a question.
Yes, I will.
What if I'm looking at your group structure. What if it is on the other way around? That is on vertical position.
Other way around, say, I will put like this, I will not write like this.
No, vertical position.
It's the same thing. And that is what I want to say now. A lot of us always are.
I can't hear you again now. Can't hear you.
Sir, we can't hear you. We've lost you, sir.
Can't hear.
Hello, sir. Hello, sir.
Acquired Ojo. Are you there?
Hello, sir. We lost you for some time. So we
And we
lost you.
can't see you. Yeah.
Are you all with me now?
Yes, sir, we can hear you now.
Okay. So if you can all hear me, I don't know.
I can hear you, sir.
Okay. Loud and clear. So having gotten all those bases, I think we can move ahead now. So
Yes,
I've been
sir.
able to say that I want to exit the board. So we've been able to look at all what I have explained there. So I hope you can all hear me. So to just learn my class. So can you hear me, please?
Yes, I can hear you, sir.
Yes, I can hear you, sir.
So what we have done in that part is number one, if I give you a question, you must be able to draw a group structure. And once you can get the group structure done, it means that you are 50% getting to where we are going. So please, the first thing you must learn to do in any exam is to determine how do you get your group structure. And please, I always tell everybody, the group structure is the main thing that you must first learn in the exam. So, and that is that. So,
Please.
can we write? We are writing. I want you to jot the following. Are you writing?
Yes, sir.
Implication of date factor. Let's just write. You can write it date factor, please. Let's call it date factor. Are you there? Date factor. So we are writing. Madam iPhone, are you with me? Date factor. So the date of acquisition has a lot. The date of acquisition.
Sir, I can't hear you, and I'm not
Sir,
seeing the
I
board.
lost you. Sir, we lost you at that point, sir. Can you take that again?
Hello, Taiwo.
Hello?
Hello, Taiwo. Good afternoon.
Yes, I can't hear him again. I think we've lost him.
Yes, maybe you should call him.
Okay.
Just call him directly.
Okay, but because he's muted, he's saying that his mic is muted.
And let's
Okay.
just call him on his phone directly. So
Okay. Or can we just be patient? Let's just hold on for him. I don't know.
all right, no
I don't
problem.
know.
If you say so.
Okay, let's just hold on. Let's see if I think he may be trying to fix it by himself.
Of course, of course,
All right, sir.
of course. Motherfucker. Good afternoon.
Hi, good afternoon.
How you doing?
I'm very well, thank you. How are
Yeah,
you?
good afternoon, everyone.
I can't hear you all. Oh. I need your response in order for me to know that we are together.
Okay,
We lost a
you
long
can go
time.
ahead.
Okay.
We lost your whatever a long time ago.
Okay. Okay,
That's
that being the case, let me continue.
Yes, can you please recap
Okay, I'll recap. We are
on
looking
the
at the
group
date of
structure?
we are looking at the date of what, class? We are looking at the date of acquisition. The relationship between the date of acquisition and the date of consolidation. Okay, I think we are back. So can we go on?
Yes, sir.
Yes, sir.
So we are looking at the relationship between the date of acquisition and the date of consolidation. And I said that this date has its own factor. And why it has a lot of factors is that we have been able to talk about the date of acquisition. Now, and I say this. So I think it will be more explained now this way. So looking at what we call the date factor. And this date factor is very important. It is very important. Look at it. That what we call date of acquisition. It has relationship with what we call the reporting date. What's another name for reporting date, class? What's another date? It's also called what we call consolidation. Are we there, please? Consolidation date. So we have, if the date of after number one, we have that the duration.
Date of consolidation.
If the duration between the date of acquisition there and date of consolidation is more than 12 months. It's more than what? 12 months. Is considered as
Can you make the
acquisition.
right thing?
Okay, read it out. I said, can I read it out? I said, duration. When the duration between the date of acquisition and date of consolidation is what? I repeat, number one. I said, if the duration between of acquisition and the date of consolidation is more than 12 months. Are we there? It is called acquisition many years ago. It is called acquisition many years ago. You agree? Do you get that, please?
Yes, sir.
Then,
Yes,
number
sir.
2, the duration between date of acquisition and date of consolidation is exactly 12 months. It is called acquisition at year start. It is called acquisition at what? Year start. And please, I beg you, is that when they give you acquisition and it is exactly 12 months, that means at the beginning of the year. Please note, and you are noting, is that they will not give you the retain any at the beginning of the year. They won't give you the retain any at the date of acquisition. Did you guys understand what I'm saying?
Yes,
Once
sir.
Yes, sir.
acquisition is 1st of January 2018, and the date of consolidation is 31st December 2018. The retain any on the date of acquisition will not be given to you, so you are going to work back. You are going to work back, and that's why I'm saying it. You will work back to get your retained earnings. That is that. Now we move to the other part, and which a lot of students, please, for example, this is always the post of the examiner when they are asking you statement of P&L. Is where we talk about the duration between date of acquisition and date of consolidation is less than 12 months. Is less than what? 12 months. Please, it is called acquisition during the year. It is called acquisition during work class during the year. And my people, this is a question you always see with statement of P&L. They will always bring it out. It is always a question in P&L. Any question. So you've been able to see the implication that the date. So when I'm asking you to write date, don't just write date. If you look at this question, you are writing the date of acquisition. It's not just that we are writing the date of acquisition for writing sake. You are writing it because it has a lot of relationship to do with the date of consolidation. And this one date of consolidation is 31 to 20 what? 18. So I may ask class, what is the relationship of this one? What is the acquisition? Many years ago, at year start, or during the year?
This is many years ago.
Okay? Now, you have a class.
Go.
Modupe, do you have any question? Okay.
I
So
don't have any at the moment.
what did you say, ma?
The network is bad.
I don't have any question at the
Okay, you don't have
moment.
Okay, thank you, ma. Now you now have classwork. Everybody, so you are not going to tell me the answer. So I can have thank you, ma. Date of acquisition and date of consolidation. Then you now tell me what is their nature. I have here 1 January 2016, and I have here 31/12/2018. Nice. Scenario 1. I have scenario B, 1 January 2018 to 31/12/2018. That is scenario 2. from 1 of July 2018 to 31st of May 2019. Scenario 4, I have 1st of November 2019 to 31st of March 2020. Scenario 5, I have 1st of what? August 2010, and I have it to what we call 31/12/2011. Please, tell me your mean here for me answer. For scenario 1, what is the acquisition?
Many years ago.
Okay,
Acquisition many years.
many years ago. Okay. For scenario 2, what is the situation?
At the beginning of the year.
Class, confirm. Taiwo is telling us. Are you sure?
At year start.
Well, 2 of you are correct. It is at year start. Or you can say at the beginning of the year. 2 of you are correct. Taiwo 2 is correct. Okay. For scenario 3, what do I have?
It's less than a year. Okay.
Is it 2029 or 2019? 2019. Okay. That's less than, it's less than 1 year.
Okay. Who else?
Is at year start.
Okay.
Who gave me that answer?
Okay, that's year start.
You have that year.
Start. Okay.
That is exactly 12 months.
Okay, exactly. Okay.
Because you have seen the 1 month inside. No, that does not mean. Are you there now? Then let's move to the next one, scenario 4. Yeah.
That's less than a year.
So that is acquisition.
That's
During the year, yes.
Okay. For the last one, what do I have?
yes.
Many
So is it
Many years ago.
Okay. So I think I can say here 5/5. That is good, and that is a good thing. You see, what we have just played with now is what some students will not pay attention to. If you don't pay attention to this, you can work your account and your account will still balance, and that does not mean that the account is correct. Because when you are using the figure and you have done normal double entry, does not mean the account is correct. So I beg you, please, I beg you, be very, very, very careful. So you must make sure that you establish the relationship between the date and the date of acquisition and the date of what class?
Consolidation.
Are you there now? So we've been able to establish one thing. You remember when we're doing our group structure, there are 3 things that we look at, parent and that, then there's the last one. Now we're moving to another one, so we can now move on. In your group structure, there are sometimes that you will not be given the percentage holding. So let's learn. Computation percentage. Yes, Moduka will quickly call for me. Computation of percentage holding. So are we all there? Computation of what class? Percentage. Did you see my handwriting, Modupe, or I should rewrite it boldly?
okay? I think I
I'm on it.
Many people can hear you.
Make
Computation of
I said I can manage this right.
okay. Computation of percentage holding. Look up everybody. Okay. For you to get the percentage holding, this is that it must be units acquired all over total units of subsidiary. Total unit of what? Of the subsidiary. Then times 100/1. Hello? Please, for you to get the percentage holding, I will always tell students, go through the route of units. I know there are also other methods, like you get some of my friends and I speak colleagues that they go through the amount. Please, when you use unit of share, you can never miss it. So when you talk about computation of percentage holding, I want to beg you, note very well that the percentage holding, according to the rule, must be in units, and that will help your accounting procedures, and you won't have any issues in terms of what you have to do and what you need not to do. So please, how do we calculate the percentage holding? The rule is total units acquired. Are we together? Total units shaking acquired divided by total units owned. Total units of subsidiary. Are you getting that? So let's see some examples. So I have this example, and I will always be using you guys as scenario. So let me get this one. Let me use Yemisi now. We're told that Yemisi acquired 80,000 units in the following entities. So we have first entity, that is Sheson. Are you there? And Sheson has what we call ordinary share at one naira each, and that share is 100,000. Okay. He also decided to acquire from Ojo. Ojo has ordinary share. Are you there? At 50 kobo each, and the value is 100,000. Number 3, he also decided to acquire from Ogunji. I think I got the name, Ogunji. And Ogunji has ordinary share at 25 kobo each, and the value of the share is 300. Class, I want to see the percentage holding for the 3 of them and join the group structure. So you are going to tell me what is it. So you have 3 minutes, 5 minutes, everyone. Yeah, let's have that done. I've opened the floor for you. At this case, I might allow you to share you're going to give me your answer, you explain to us. So oh yeah, let's get that done. Because once we can get the percentage holding now, we now move to what we call the net assets acquired. Go to the group. So we are not going to solve that question of the one that we did today. I'm going to see the detail of everything. I want us to be able to do this group structure, all those 5 steps. So when we are going to see physically, so I want us to end the class so that you will say all your data are consumed. What's the answer? Ojo, hear me say Sheson. What's the percentage holding?
I'm still working on it, sir.
Okay.
Is it not 100,000 units?
Let me say I don't know. At this point, I'm not going to give answer to everybody because before we got here, if you remember, I have done something earlier. If you remember, we have done something earlier on a slide when we started one time that I told you that units, shares are always based on units. Yes. I think that is that slide. Remember, we did something like this. So I've helped your situation. So I haven't helped you now. I go back to the question. So, what is the answer? Let me see. Benedict, iPhone. Please, the person using
Let me
iPhone.
The first
Okay.
one,
let
I
me
can say,
Okay.
let me try
okay,
for
Okay.
the
let me
first,
try.
the first one session.
So,
I'll
take
say
it one by
Yemisi acquired. Okay,
Ben.
let me just try for the first one.
Okay, Benedict, we are listening.
Oh, okay, I will say that Yemisi acquired 80% of Sensor online shares. I think
Okay.
that's the one I know.
And that is the
That's
end.
the one I know. The
No,
other
Benedict,
ones now, obviously.
80%. Okay, that is Benedict.
Okay,
Okay, let's
sir.
get. Let me see first, please, before Taiwo. Let
Yes,
me
sir. I
see.
want to attend
Let's listen to Mr. Taiwo. Mrs. Yemisi, speak, please.
the
Mrs.
second one.
Later.
Later. Okay. Okay. Taiwo, let's have your answer now.
Okay, for Ojo, he acquired the answer
Ojo, your network is Ojoro.
is 0.4. That's 40%. I don't know if
Okay.
I'm
For
correct.
you now.
I want to okay, so that I'll be able to know what you guys are saying and we'll enjoy it together. Okay, let's take it one by one. Modupe, what's your own contribution?
80%.
In Sheson, how about Ojo?
Still 80%. Going by the formula.
Okay. Okay. Who else? Let me see that Ojo is wrong.
Okay. Okay, let me try. For Sheson, 80,000 units.
80,000 Abi percent. How many percentage did he have in Sheson? 80%.
80,000 units now.
You bought 80,000 units. We want you to give us answers in percentage. We know what you are saying is correct.
Okay, let me try
Okay, sir.
again. I will say insertion you acquired 80%, while for Ojo you acquired 40%,
Yes, that was
Correct.
what I said earlier.
and for Ogunji that's 20%.
Correct.
20%, yes, now.
So class, I think we need to give that award to Benedict. It is Benedict that got it. Sorry, you are saying you also got it, but we could not hear you. Okay. Let me now
Okay, sir.
Okay, let me solve it so that we can all see what's going on.
Okay.
But before we solve, I need to show you what was actually operating. Because formula percentage. Are you with me now? Dupa,
I'm looking at your.
if you are looking at my question, it was because of you I have to even rewrite it. Look at it here. It is 1 naira each. But for this one, it is
So we can't hear you. We can't hear you.
We have lost you. We can't hear you.
At your formula. Like,
for this
yes, I need to explain now.
Hello, Tayo.
Yes. We have
Somehow it
lost
seems I
him again.
missed. Oh, okay. I thought I was the one.
Okay, it was explaining computation of percentage holding, and that was where we lost him.
Yes, I was. When we are not giving percentages, right?
Okay.
No,
All right.
percentage
I
holding.
don't know how.
Oh, percentage holding. Okay. Yeah, I thought I was the one. I was trying to.
Yes, that was
All
where it
right.
was explaining given units.
Yes, when we are giving units,
Okay.
yes.
Yes, then we'll use it to get our percentage holding. I think that was where the network now. I don't know. I think it's his network.
Let's just hold on.
Yes.
Okay. How class? Let me explain how I got my answer.
Okay, go ahead.
So are we there? Yeah.
Yes.
So yeah, if you look
Yes.
at the computation, the first one said the MEC acquired 80%. Let me start with Session. And it said that the formula is units acquired all over total units of subsidiaries multiplied by the percentage. So now apply 80 all over 100,000 times 100 over 1. So that will give you 0.8. If you multiply by 100, you have 80%. But not forgotten that the first one is based on 1 naira. Are you getting me?
Yes, we are getting that.
So it's based on 1 naira. So the next one, if you want to compute
Yes, please go ahead.
if you want to compute for Ujo, it will now be 80 all over 100,000 times 100 times, you now times the 50 kobo there. You will now multiply by times zero, that 50 kobo there. So that's how you will now get the 40%. You apply the
Okay.
same thing to that
Yes.
of Guji. So that was how I was able to get the answer right.
Okay. I think I got
The
that.
first one, it's on 1 naira. If you multiply
Please
by
say
1
that.
naira, you get the right answer.
Sorry, Mr. Bennett. Please say that again. I didn't really hear you very well. I think I lost him before I began to explain those. That very
Okay.
part.
All right. What I said is, for us to get the answer, you apply the 80 to the 80,000 all over 100,000 times the percentage. Then you now you now multiply again by 1 naira. So the next one, are you there? Please confirm that you can hear me. Please confirm that I'm not talking to myself.
Yes, we can hear you.
Yes, we can
We
hear
can
you.
hear you. Go ahead, we can hear you.
The next one too, you apply the same figure fix the figures in the formula, then you multiply it by 0.5. The other one you multiply by 0.25. That's how you now get 80%, 40%, and then the last one, which is 20%. Are we clear, or should I recap?
Yes, I got that.
Thank you very much. I got that.
Okay, I think our teacher is back.
Okay.
Oh, it's not your back. Oh. It's not your back. Let's wait for him.
Huh. Are you
Okay,
with
sir.
me?
Welcome back, sir. Yes, yes, we can hear you, sir. Welcome back.
Hello, are you all with me?
Yes, we can. We can hear you.
Please, are
Now.
you with me?
We can hear you, sir.
Yeah, we are with you. We can hear you, sir. Yes, please.
I don't know. For the first time, I'm having internet downtown in my house.
We have a terrible feedback from your end, sir.
Okay, I think there's no such again. I don't. Is there still any feedback from my end? No.
No,
Can
at
you
all.
all hear me, please? So can you hear me, please?
Yes, we can hear you, sir.
I can hear you, sir.
Okay. Pardon me. I don't know. Maybe it's this answer that's causing it. I can't remember when last I have been on air, and I have to be cut off like this. Please let us start. I want us to just complete it sooner so that our class can be completed. Now I think I stop at the something. What's going on now? The board.
Well,
1 minute. I don't need to share my screen. Okay, this is where we stop. So let me quickly complete this solution so that makes my job easier, and then we all move by His grace to the second one. So the first one, I said we acquired what we call Sheson, and then we all have agreed that we are looking at the unit acquired divided by the total unit owned by Sheson. Please, where I want you to pay attention is that the unit by Sheson here is 100,000 units. So we are saying, who is actually this guy that is buying all of them? Yemisi. So Yemisi is buying the own company. We are having Yemisi. Then Yemisi in yes, that is 80,000 units. Modupe, are you with us? Divided by 100,000 units times 100 over 1. So that will give me 80%. But in this case, when we have here, okay, I get you. If you have them, okay, I get you. Yemisi in Ojo. Yemisi is still buying 8,000 units. But please, the unit that is owned by you now is going to be 200,000 units times 100 over 1. Please, how do I get 200,000 units? I would like to explain. My 200,000 units is by 100,000 naira. Are you there? Divided by 50 kobo. Divided by what? 50 kobo. And that is what we are going to have. So that is for that. Now let's go to the last person. We all acquired. So we have BC in Ogunji. Let me see, Ogunji is still going to be 80,000 units divided by. Now we are not going to have 100,000 units or 200,000 units. Rather, what we are going to have now, because of the transaction we are going to see, is that it was quoted at how much? It was quoted at 25 kobo. Please, there was a diet that this question was asked, and the examiner gave 25 kobo. A lot of students did not pay attention. All of us are all used to value, 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 value. Please, when it comes to shares, we don't look at values, we look at the unit. So what is the unit? And that is what we need to pay attention to. Are we there, please? So that unit here, to get one, let me quickly work that, because that is where I want us to stop, and I'll be able to give. So that is 100,000 divided by 25. So 100,000 divided by 25 is going to give me how much? How much, class? How much is 100,000 divided by 25 kobo? That is
400.
400,000 units. Then times
400.
400,000. 400,000.
400,000 units.
You have what? 20%. So any other question? Do you have any other question? No. So what we have been able to achieve today, and that I don't want us to start having issues. So because I'm going to talk to the registrar that you will make me available in your class for next week. I don't know how we're going to do it. I'm going to pay. I think you guys have a structured timetable. I want to beg that I'm in there so that you can have. So this is the first step. And that first step is ability to determine the group structure. So that is that. If you still permit, should I go on or you want us to end the class here? We should go on.
Go on.
Go on, sir.
Okay, thank you. So we now go to step 2. Thank you. Step 2. This
Go
step
on,
2
sir.
says we should determine the net.
The network is not helping matters.
You see, that's why I also have to put it on YouTube.
This network is
Now,
not helping matters.
YouTube. I think the government or the network people are the ones giving us this. So let's quickly look at this one, the net asset. So how do we determine the net asset? The net asset of the subsidiary will be going through the equity. And please,
Hello, sir.
yes, please.
Please, pardon me. Someone has a question on acquisition.
Okay.
I
What is
think
it?
one of our colleagues on using iPhone.
Okay, Madam iPhone, please, what's your question? Or let me see. Let me see what's your question.
No, I don't have question.
Okay, who has question? Is it iPhone or Modupe? Anybody?
It's the
Nobody?
fella using iPhone. Says
Yeah,
you have a
there's a
question.
question here.
Okay, go ahead.
He said he has a question on
Okay.
acquisition date area.
The chat. I have question on acquisition date area. Okay, madam. You have your question on acquisition date area. Let me quickly go there. I saw your message on your chat. Let me go back. On acquisition date area, we said that we must be able to compare the date of acquisition with the date of what? Consolidation. If the date of acquisition and date of consolidation, the difference between them, the duration is more than 12 months, we assume to be many years ago. I think just a common balance language. But when it is exactly 12 months, the rule is that it is acquired at the beginning of the year. But if it is less than 12 months, we say that it is acquired during the year. And we look at this question. And we can see from the first question that it is more than 12 months. Please, the basis of you getting this scenario is for you to look at the numbers of months that we have. I have question on this. When are we likely to come across post-acquisition issues? Thank you, ma. That is where we are going now. And that is where we start looking at what we call this issue or what we call, that is not where we are going. So I'm going to answer your question with this. What are determination of net asset? When it comes to determination of assets, we are going to be having 3 information. Information on date of acquisition. We need information on what we call date reporting. Now, the difference between the date of acquisition and date reporting now gives you what we call post-acquisition. So there are 3 segments in our net asset that we must provide information. They will give us, we will need information on date of acquisition, date of reporting, and post-acquisition. And it's very simple, man. Please, this is determination of net asset of subsidiary. We are considering subsidiary, the subsidiary. And please, like what I've told you earlier, the next step I'm looking at here, you're going to see Mr. say total asset minus liability. No, because I know that asset is also the same as my equity. So what I'm going to have here will be the equity. So I have my equity, ordinary share capital. And please, it must be the information of the subsidiary. Then I also have what called share premium. Then also what we call the retained earnings. So these are those three main information. Please, I would like to quote. Apart from premium, you can also
Can
have.
you recap? I lost. Please, can you recap? I
Okay,
lost my connection.
okay, let me recap. We are saying for the net asset, the rule is that on that net asset, we need three information. There are two that we have, but those two information will not provide us with the third information. And the two information that we always have in any exam or any information provided by the examiner as follows. We have the information on what we call date of acquisition. We have information on what we call date of acquisition. We have information on what we call date of what? Date of acquisition, which you will get to see there. We also have information on what we call date of reporting. Now, comparing the date of acquisition with the date of reporting is what will give rise to what we call post-acquisition information. Do we get that now? So, and note the net asset. We are not coming here to say total asset minus total liability. No. What we are doing here is our ability to use our equity position. And our equity position in this instance is 1, ordinary share capital, 2, share premium, but you can also have what we call revaluation reserve. Now, apart from all this, you can also call your retained earnings. Now, these are the 4 main information. Please note, and you are noting, that it is not compulsory that you have all this information in your exam. But what I have done is to give you a global picture of what you need to know for the exam. Now, after this, there are now other adjustments that can come in. But we are not going to look at those adjustments now. We'll leave them out. Now, what do? We'll go to our question. And I want to look at this. So I have my question already. This is a template. In your question, they would have provided you information on the retained earning, on the date of reporting, on the what? Date of reporting. And don't forget, date of reporting is our statement of financial position provided in our exam. Now, how do I get my ordinary share? My ordinary share is always stated because whatever is on date of what reporting will also be the value of my what? Date of acquisition, because I was not told that shares were issued. Whatever is also my share premium on date of reporting will also be my amount on the date of what? Acquisition. Whatever is also my valuation will also be that amount on this. But please note, and you are noting, that when it comes to what we call retained earnings, your retained earnings on the date of reporting will not be same as your retained earnings on the date of acquisition. And you can quickly see that from that question that we gave. If you remember that sample question I gave you, and I want us to quickly look at that sample question. On the sample question, look at it. On that sample question, what is our retained earning on the date of acquisition?
15 million.
15 million.
15 million.
Thank you. Then what is our retained earning on the date of consolidation?
I think it was 20.
20. So do we get that now? So please,
Yes, sir.
your retained earnings on the date of acquisition and on the date of reporting will not be the same, except if the date of acquisition is the same thing as the date of reporting. Do you get that, please? Hello? We say, and I want you to note that your retained earning
Repeat that, sir.
Yes, sir.
Your retained earning on the date of acquisition will not be the same with your retained earning on the date of reporting. Are you there now?
Yes.
Except Except the only thing that will make the two values to be the same, to have the same value, is and only if your date of acquisition and your date of reporting is the same. So do you get that now?
Yes, sir.
They will not always be the same. So I want you to have that. Now, another point of note is that note is only your return date. Is it your return end that you can all have negative? It's only on your reporting, on your what return any that you can also have what called negative. And this negative still means you are having a debit balance. You are having a bit to a class balance. Do you get that, class?
Yes, sir.
Please, it's only on your retained earnings that you can have what we call a negative. And what does that mean? Is that your retained earnings is having a debit balance. Your retained earnings is like a reserve, and that has credit balance. But once you see it having a debit balance, you put it in bracket. Do you get that? Now we are now focusing on something. We will not get at the end. Let's forget about the adjustments now. At the end of the day, you had every year, I'll call on the date of acquisition AA. On the date of voting, I'll call it BB. Now, if you look at what I'm doing now, on this side, I don't know if you guys can see as I'm moving without my razor there. On this side, are we there? On this side, everything you are going to get on this side is a relation between date of reporting and date. And please, I want you to know, for you to get your post, you will tell you have to work that all information on date of reporting minus all information on the date of acquisition. Do you get what I'm saying? We are saying that all the information on date of reporting is subtracted. So normally on this your asset, on this your share capital, it will be 0. Share premium technically too will be 0. Revaluation reserve or surplus will be 0. It is not your retained earnings. You can either have a positive or you can have a work class negative. And if you want to be sure that all what you have done is correct, whatever you are having up here must be the same thing when you compare these two elements. And that is what gives rise to what we call post-acquisition reserve. Post-acquisition work class reserve. What I've just done now, it's a question that ICANN has asked as a simple question and a 3-mark question. Are you there now? And I'm going to give you how that question was tested. So let's have this question. You are asked, compute the post-acquisition reserve. Yes, compute the post-acquisition reserve. And they told you, look up, sold A Limited acquired B Limited on 1 January 2018 with the reporting date of 31/06/2016. You are now told, full stop, the following items were provided. Listen, net asset, are you there, of B Limited on 1 January 2014 is 60,000. Net asset of B Limited on 1 January 2018 is 40,000 naira. Net asset of B Limited on 31/12/2018 is 100,000. Net asset of B Limited on 31 June 2018 is 30,000. Okay, class. Determine the post-acquisition reserve on consolidation. I won't. The word is not consolidation, for consolidation. Oh, yeah. What is the answer? Give me the answer. Can I get the answer? Modupe, I'm sure you should see my writing this time around, though. Bennett, what is my answer? Oh, yeah. Now, just to compare two values. What is the post-acquisition reserve? Do you need the format? I should help you. Okay, I'll help you with the format. What is the answer? Ojo, I think you are trying to give me answer. Oh, yeah, sharp. We are moving to the third one, class. But you have to finish this one, then I'll be able to give you the assignment. Nobody? Benedict? Modupe, Sheson, Yemisi? Oh, yeah,
Yes, sir. Can you
Yes, sir. Network
move
logged
to
me
the
up.
next board?
Okay.
I just came on now.
Next board, sir. Can we see the next board?
I'm already at the next board so that you won't say you did not see it. Fellow do that. I say complete the post-acquisition reserve for consolidation. A Limited acquired B Limited on 1 January 2018 with a reporting date of 31 June 2018. The following items were provided. Oh, yeah. Please give me the post-acquisition reserve. Post-acquisition reserve. Quick answer. Ejo. Post-acquisition reserve. Emma Salo. Modupe. Yemisi.
Okay, sir. Okay, I want to attempt it.
What is the answer?
Okay, can I attempt it, sir? The acquisition was 1/1/2018. And the reporting date is 31/06/2018. Now, the net, okay, for the first one, they said net is no post-acquisition reserve.
There's no post-acquisition reserve.
Yes, because the date of acquisition was 1/1/2018. And the date that I'm seeing here for the first one was 1/1/2014. That was the 60,000 was
So is that the
acquisition.
Only what is the second one? What is the second one?
The second one, 1/1/2018. That's it. Now that date is the date of acquisition, and it's also the date of consolidation. So 40,000.
No, that is not consolidation.
Okay, sorry, the reporting date. Okay, sorry.
I told you that the reporting date is the date of reporting. Okay. Yeah. Somebody else you have shown us. Let me see. Can I hear your voice? Speak up. What's our answer?
This one.
Let me see. No more talking.
Consolidation.
Do you want to give us is the question correct or not? The question is correct. What's the answer, Ojo? Okay, class, not to wait too much time. Let me go back. When we talk about post-acquisition, I said this is the relationship. And look at the down point here. The date of reporting minus the date of acquisition. So in this question, they've already informed me. And I'm well informed that the date of acquisition is 1st January 2018. The date of reporting is 31 December and 31 June. And I need those 2 dates. this date is this date. Yes or no? And why is date is this date? That means I need their two corresponding values. So I think I can get my answer. So with that, I can now tell you that my solution is as follows.
Yes,
Now
sir.
my post acquisition reserve for who is acquiring who? Who was the person acquiring? A limited. Are you there? In B limited. Are you there? And even that thing is equal to B. The post acquisition of B. The position of B limited will now be as follows. So I will call net asset on the date of reporting, which will agree to be 31/6/2018, and the amount is 30,000 naira. And the net asset on the date of acquisition is 1st January 2018, and the amount is how much? 40,000. And we need to subtract. So,
40,000.
my people, answer negative what? 10,000. Yeah, Ojo. That is to show there is foul. It is how much? Negative 10,000. So,
Yeah.
class.
Yes, sir. Negative 10,000.
So, I will not give another example. I will wait for you in another minute. Let's go to step 3. What is I quickly go back. Step 3. Yeah. Is that correct? Have you seen it? So can I go on?
Yes, sir. Right on, sir. You can go.
Yes,
Step 3 now. Step 3. We are now looking at what we call computation of goodwill or gain on bargain purchase. Gain on bargain what? Purchase. So how do we get that? Know very well that this one is just that comparing two items. We are comparing what we call the consideration transferred. Are you there now? And that consideration transfer we're talking about. In order you hear them, they call it purchase consideration. See the same grammar. And please note very well, it's going to include the amount that the parent is paying and the amount that the NCI is paying. That is the total amount of our purchase consideration. What I've done in this question now is that we are doing the one that we have been given. Then we'll now compare it with what we call the net asset of the subsidiary on the date of acquisition. On the date of what class? Acquisition. And please, the right word that we call it fair value. Please. Please, why I'm using the word fair value, you will see as we move on in the other question. Because it must be the one you have adjusted. Now, what is that fair value? We'll go back to step 2. And that value is our value on the date of acquisition. On the date of what class? Acquisition. And what is that date on acquisition class? AA. So the value you are seeing here is now what we are going to take to this place as our what class? Net assets acquired. Net assets shaking you acquired. Are we together? That will be our net asset acquired. Then I compare the two. I haven't compared it. Whatever I'm going to get will now determine what my grammar will be. please note, if my answer is positive, I call it goodwill. But if answer is negative, it's called gain on bargain purchase. Gain on bargain purchase. So, any question? Any question?
Please, can you recap?
Okay, I will start. Step 3 says,
Thank you.
step 3 says that we must compute our goodwill. And at that step 3, we are determining determination of goodwill or gain on bargain purchase. We are comparing two things. And in order for me to recap, is that we are trying to say this is the amount I'm paying by a subsidiary, and what is the cost of that subsidiary. That is what we are comparing. But please, in group, we don't just call it amount I'm paying. Rather, he has his own term. We are comparing the consideration transfer, which is also referred to as what we call purchase consideration, which is also referred to as the word as purchase what? Consideration. And that amount comprises of what is the parent paying and what the NCI is paying. Are you there? So let's quickly rush down to the sample of the question that we did. What is the purchase consideration paid by Modupe to acquire Dojo in this question?
15 million.
Antoine, is a lie. Wrong?
Oh, sorry, his investments in Ojo 20 million. Sorry.
Bless you. Correct. Are we getting that now? So
Yes,
what
sir.
is the amount that the NCI is paying? I think at this juncture, I will have to change this on so that we can enjoy it. What is the amount that the NCI is paying? Are you there? Yeah, no,
It's also 20 million.
Are you there now?
Yes, it's 20 million.
Paid, no, going to paid, and I changed it to 5 million. So how much did he pay? So that you will not confuse it together. Let's start
That's 5
again.
million.
How much was paid by the parents? 20 million. How much was paid by the NCI?
5 million.
5 million.
NCI consider. Are you there? Pay 5 million as consideration. So we've been able to get that. So what I'm referring to, we gotta get that. Now the question will now be, what is the NCI of the subsidiary on the date of acquisition? We go back. That will now take us back to that our format. That is, whatever is the amount that is the addition here will now be the amount that will be paid, that will be categorized as the net asset on that day. And our result can either be positive or negative. So if our answer is positive, we'll call it goodwill. If our answer is negative, we'll call it what class?
Gain on bargain purchase.
So we have a class
Gain
for that. Gain on bargain or gain on bargain purchase. Now class work, note very well. It's also an I can pass question. And when I bring this question, students will like, could the exam be that cheap? Yes, it could be cheap. So let's look at the question. Let's give it a very good one. Question. We are told, in this case, I'll be going out of your class. I'll say, so let me use so that where acquired 90% of Shola food. So the following provided. Acquired Shola food on 1 June 2016. So the following were provided. So I have this. We're told investment in Shola. We paid 160,000 naira. We're told that the net asset of Amife on 1 January 2018 is 400,000 naira. The net asset of Shola on 31/12/2018 is 140,000 naira. Net asset of Shola on 1 June 2016 is 150,000 naira. You are now told NCI consideration paid is 25,000 naira. Required. State, no, if I say state, you just give me value. Compute the goodwill or bargain, gain on bargain purchase. Oh yeah, give me the answer. Oh yeah, sharp. Yeah. Answer. Yemisi, Modupe, Ojo. Can I have my answer? After this, we just have the NCI left. After the NCI, then we'll now move to the last one. Yeah, Ojo. NCI, oh yeah. What is the goodwill, please? What is the goodwill, my people?
Let me try. 125,000.
Goodwill is 125,000.
Hello.
But
Yes, please.
that is incorrect. That is incorrect. Oh yeah, Yomi. Modupa have tried.
15,000.
Okay, Modupa have changed her mind. She said 15,000.
No,
Maybe Modupa.
No, I wasn't the one that
I said
spoke.
15,000.
Okay, let me see 15,000. That is correct.
Yes.
You can phone a friend. Who else? Ojo? Okay, so let us wait 2 more time. This question is ICAR past question. I can't recall. I think it's 2016 or 17. So let's see the solution. As small as that question is, it was actually a 5-month question. 5 months. We're told computation of goodwill. So let's get that. For me to compute my goodwill, I need one thing. I need my consideration transfer. What is the consideration transfer paid by Amife? How much, class? How much was the consideration paid by Amife? You have the question with you. How much?
25,000. 25,000 naira.
No. The amount paid by Amife is represented by what we refer to as the investment in Shola. They've told us that Amife acquired Shola. So what's the investment value that he acquired in Shola? The answer is 160. Hold on. Then we now move on. How much was paid by NCI? What is the consideration paid by NCI? NCI paid 25,000. So my people, what is the total value of the consideration paid? 185,000. So I will now compare with the net asset on the date of acquisition. What is the net asset on the date of acquisition? And the date of acquisition was given to be, what is our date of acquisition? What is the date of acquisition, class? This is the date of acquisition. That is 1st of July 2016, and that is the date here. So if I can get the date, I can now give you the associated amount. That is net asset of Shola. So the net asset of Shola and the date of acquisition is how much? 150,000. So I have that as 150,000. So if I subtract, what is going to be my goodwill? So I cannot get my goodwill. And the goodwill is how much? 185,000 minus 150,000. What is the answer? 25,000.
35. 35.
Is it 35?
It's 35 now.
It's
Okay.
35.
It's 35.
Okay, I was testing you. And that is the answer. Any question? Hey, John, any question? Okay. If there is no question, we have been able to determine our goodwill. When we move on, we look at impairment. So step 4. At the very pariwo. So good. Step 4. Computation of. Yes, I'm listening.
That solution, I have not copied it. Let me just print it.
Oh yeah, a copy. So when you are through, you let us know. Any other question?
Okay.
So we are now 4. So after that, we'll go to step 5. Are we through?
Remain small. Okay, sir.
Okay, thank you. And that is a beautiful one. So let's go to step 4. That is computation of NCI. What is the value of computation of NCI value? Either to be consolidated. So what is the value to be consolidated? Please note, I am noting this is the best method. First thing, you are going to tell us the NCI consideration amount. So whatever is the amount that is paid by the NCI, you write the value there. The NCI for please, there is not consolidation, is consideration. So whatever amount that the NCI is paying, you put it there. Then you add what of acquisition. Are you now of subsidiaries attributable to NCI. Attributable to NCI. That takes us back to what we have done here. And let's quickly remind ourselves what we have done earlier. We have the NCI percentage times what was the post-acquisition acquisition reserve. You will now say times the post acquisition reserve in step 2. So whatever you have as answer you add, it could be positive or it could be negative. Are you there now? It could be a positive or it could be what? Negative. Now, if there's any adjustment, you also put the adjustment there. In case there's any adjustment, you also put the adjustment there. And please, the most culprit of the adjustment is what called impairment loss, which must be attributable to NCI. Correct to NCI percentage. Whatever you now get now represent the amount of NCI value to be consolidated. NCI value to be what class? Consolidated. So, are you done with that? Can I move to the next step?
Sir, hold on, sir. I want to ask a question.
Yes, ask me.
Okay, the adjustment, you are saying impairment loss. Will it be the percentage of the NCI we are going to use in determining?
The percentage.
Okay.
Please, there are other adjustments to others. There are still others. We are mentioning them now. Let's just still do basic. But anything you are bringing it here must only be items that relate to NCI alone. So even if there's an impairment of 10,000, you will correct it to NCI percentage because the balance will be borne by the parent. Are you getting that?
Okay,
now, also
sorry.
look at acquisition reserve because all the post acquisition reserve is owned by those people that own the subsidiary, and the owners of subsidiary has basically divided into two broad views, which is the parent and the who? NCI.
Yes, sir.
So let's now go to the 5th step, which is the final step 5. The step 5 is talking about what we call the group retained earnings. The group or class retained, and the group retained earnings comprises of the following. Thing 1, we talk about called the parent retained earnings, which you have to see in the question. Then number 9, you now add what called post acquisition reserve. Are we there now? Attributable to parent. So you can now see here, you are going to correlate to parent. Then number 8, are you there now? I haven't done that. You make sure you put all those ones there, and don't, you now have all the adjustments. There are now many adjustments that can come here. I can give you all those lists of adjustments, but we'll move in further questions looking at them. See, number 1, you look at what we call impairment. That will be the see, number 2, we talk about what POP. Although when we move, these are also topics that we need to pick on their own. POP means provision on unrealized profit. So we have that. We also look at the component of dividend. We have that. Apart from dividend, there are also other ones. You talk about what we call depreciation. Talk about what we call under
Sorry,
depreciation.
please, after pop, what do we have?
After POP, we have dividend.
Yeah, dividend, okay.
Yes, ma'am. After that, you have under depreciation, or we call it additional depreciation. And there are many others, so I won't want to, which you are still going to learn later as we move ahead. And that is the end of all the 5 steps. Any question for me? Modupe, any question?
No, not at the moment.
Okay, now this is your class work, your assignment, and I want the answer on or before 8 p.m. today. I'm giving you this assignment and you give me your answer on or before 8 p.m. today. Please, this question that I have here, Modupe acquired. You are now going to use all the 5 steps and you give me the answer. I'm giving you the format, so give me the answer. Is that doable?
Yes, sir.
You want me to solve it, then I'll give you another one.
Please solve it and give us another one. Thank you.
Okay, I agree. Okay, I agree with you. So I believe you all have that question with you, the one I just changed, because I don't have it. So you'll be the one to help me out. Do you have the question? Do you have this question, so that, because I don't want to be moving from slide to slide. It's on slide 20, slide 14. I hope you all have this question. Do you all have it?
Yes, sir.
Okay, so let's not solve now. So in that case, I start. So I have this step 1. For my step 1, that one is very easy. So I'm solving solution. I think I would like to pick a brighter color. Solution number 1, which is for my step 1. Step 1 said I should do group structure. So if I do group structure, the owner, which is the company Modupe, acquired Ujo, and that is 80%. And the date of acquisition is what date? I have NCI to be 20%. So my date of acquisition, that is 14. My date of acquisition is 1st of January 2014. 1st of January 2014. Okay, and I have that. So I'm through with step 1. Step 2. What am I to do in step 2? Determine the net asset of Ojo. And for me to determine that net asset of Ojo, I need information of 3 days. Date of acquisition. I need the date of reporting. And I need my post acquisition. So I have them as it is. What are the information that I need? I need the ordinary share capital. And from that Ojo question, I know that the next thing I have is what we call retained earnings. So I'm working in millions. From this question, what I have is that I got to know that Ojo has 70. That information, I have these two, 70 and 20. So on the date of reporting, he has 70 ordinary shares and he has 20 retained earnings. Now, without much problem, the amount of the share capital is still 70. No information. But on the date of acquisition, what I have as my retained earning is 15 million. So I go there, I will now have 15 million. There's no other adjustment, so I just close the account. No wahala. No foreign shin. This one is 85 and this is 90. And this will give me minus, because for me to get my post acquisition, I will talk about the value on the date of reporting minus date of acquisition. So that gives me 0. This gives me 5. The difference between these is also 5. So that ends step 2. Okay. Step 3. Step 3, what am I to calculate? Computation of goodwill. So to get the computation of my goodwill in millions, I need the following information. One, I need my consideration transfer, which is another word saying purchase consideration. So how much did Modupe paid? Modupe paid a total sum of how much? What was his investment in Uju? So Modupe paid a total sum of 20 million and the NCI paid 5 million. So I have all those information there. So Modupe paid 20 million and the NCI paid 5 million. So that means total consideration is 25. So what is now the net asset? The net asset of Uju on the date of acquisition. As we move ahead, I don't need to be writing all this grammar. So that one is on the next page. I don't have to move much. The amount is 85 million. So I'll bring it here. 85. And there's an issue. If you look at this, he paid 25 million in order to acquire a company that is 85. So that means we are having 60 million negative, and that is all for gain on bargain purchase. Now, this is what the rule says, and I love what I just played out. Anytime you determine and you find out that what you are having is not goodwill, is gain on bargain purchase, the standard says that you reevaluate. And if you reevaluate and you see that that is the same information you get, so what is the treatment? The treatment is that when you gain on bargain purchase, transfer to reserve. Transfer it to what? To reserve. And that is what the rule says. When you calculate your goodwill, and at the end of the day, you have gain on bargain purchase, the rule says you transfer to your what? You. Okay. So sorry, to your reserve. Let's go to step 4. Step 4. What is step 4 saying? Computation of NCI value. So to get the NCI value, which one? What was the purchase? What was the purchase consideration paid by the NCI? NCI paid 5 million. So here we are now looking at the zone post acquisition from the subsidiary. Here, from what we have, what is the percentage holding of the subsidiary? That is 20%. And what is the post-acquisition reserve value? 5. So at this point, I will need your help because I don't have calculator. So class, what is 20% of 5 million? What is 20% of 5 million? 20% of 5 million.
Million.
Huh?
1 million.
Huh? I
1
disagree.
million. 1 million.
Are you sure?
1
Yes,
million.
20% of 5 million is 1 million.
Okay. I'm testing. I have to confirm that you are with me. You are correct. You are correct.
1 million.
So the answer is 6 million. So we have that to be 6. So next, step what are we now? Step what? Step 5. For step 5, we now look at computation of group retained earnings. Group retained earnings. So for me to now do the what? The group retained earnings, we start. What is Modupe retained earnings? Oh yeah, in the question, help me. What is Modupe retained earnings? I guess you guys have the question. Okay,
30 million. 30 million.
let's confirm. Mr. Ojo is on fire. Correct. Mr. Ojo is fire. He gave us the answer and it's correct. That is 30 million. So let's look at it. Mr. Ojo, 30 million. So what is now the post acquisition? Are we there? Reserve from Ojo. He has 80%. Are you there now? Times 5 million. So what is 80% of 5 million? 4. Any other question?
That's 4 million.
4
4
million.
million.
But there's some
4
that will
million.
not be here. If you look at it, when we're determining our goodwill, we did not have goodwill. Rather, we have what?
Gain on bargain
We have,
purchase.
so
Gain
that
on
gain
bargaining purchase.
will now go to our reserve. So we'll now bring it here. We'll now say gain on bargain purchase. I didn't mean it's goodwill. We would have taken it consolidation. So what is the amount of the gain on bargain purchase? I think it's 60. So
60 million.
60. So
60
what's the
million.
total we have? We have 94. Is it difficult? So, you know, this is not the question itself. Oh. The examiner will say prepare the consolidated statement of profit or statement of financial position. Now, I haven't done this. Our question is solved. Because you guys have been able to be patient enough, let's solve the real question. Now come in, now say Modupe Group. And the question is consolidated.
Excuse me, sir.
Yes, ma'am.
It remains small. I want to finish the last page.
Okay. Let me go to the last place so that I will now allow you. So we'll now solve the question finally. And I'll be very happy now to give you assignments. Many assignments. Are you true, Miss Yemisi?
Yes.
Okay.
Yes,
There's
sir.
somebody that I'm not seeing here, and she was in our class. What's her name? Shewa. I've forgotten. The lady that sat at the front row. Okay. Let's see. So we now have our final solution here. So we have here consolidated statement of financial position. As that, what is the date of reporting that we're given in that question?
31/12/2018.
2018, Abby. So 31/12. So have it 31/12/2018. Now, what is the consequence of consolidation? If I can, on your examiner, ask you, what is the consequence or what is the implication? What is the big deal? People will say, no, it's not difficult. What are we now saying is that, having gone through all those 5 steps, consolidation process will be completed by aggregating the asset and liability of the subsidiary. So we will now start. I need your help. And that your help is this. I have PPE. The PPE of the parents. What's the value of the PPE of the parents? 100. And that of Ojo is what? 80. So I will now consolidate. So I'll come here. All right. PPE. Ojo has 100. The subsidiary has 80. So mean that the total amount is what? 180. Total amount is what? 180. Okay, there's no goodwill, so I have what current asset. What is the current asset we have? We have inventory. What is the inventory of the parent? Oh yeah.
The inventory of parents is 30 million.
No, okay, 30. And what's that of the subsidiary?
10 million.
10 million. So I will be relying on you now to give me value. 30 plus 10. That gives me what? 40. Electronic pen. So we have to be what class? 40. Next, what is the next item that I have? And I have what called receivable. What is the receivables of the parent?
10 million.
Receivable of subsidiary income? 15.
15.
So I have 10 plus 15. That gives me 25. And I have cash. What is the cash of the parent?
40 million.
40 million. What is the amount of the subsidiary?
5 million.
5 million. So that gives me 55. So I have the addition. Then what is the total? Which will give me my total asset. So class, what is the total? This 10. That is what? 8, 9, 10.
110. 110.
So class, please don't total here too. So let's now go to the next part. We are now having the equity and liability. So there's an ordinary share. Now, what is the ordinary share that we are going to have? Now, this is now where I want you to pay attention. Under this ordinary share, I cannot add the share capital of parents with the subsidiary. Why? Because if you remember, the amount of the 70 million of this subsidiary, we have used it already. We have already used this value in computing our work class. Our cost of work, our computing our net asset. Yes or no?
Yes. Yes, sir.
Also use this 20. Yes or no? Yes or no? Yes. And we have also used this 30. We have also used this 30 in order to get what we call the group retained earnings. Then you have a better.
Then.
Yes.
So if you look at it, we are now only left with 125. So we'll just come here and we'll write. We'll tell ourselves that the share capital is not 125. So if I want to know the group retained earnings, please, I don't want to support abbreviation. Group retained earnings. What's our group retained earnings?
$94.
What's our group retained? 94. Have it there, 94. So I will now my non-controlling interest. What is the value of my non-controlling interest? Don't forget this is working 5. My non-controlling interest is working 4. So what is my non-controlling interest value?
6.
6, correct.
6.
So now we now to the liability. I have what called non-current liability. So what's my current liability? In my non-current liability, I think I have a loan. What is the loan of the parent?
15 million.
What is the loan of the subsidiary?
So
12. So that gives me addition of what?
27.
So I now need my current liability. And that is my payable, Abi. Yes. What is the payable of the parent?
10.
10. What is the payable of the subsidiary?
8.
So that give me 18. So can I have the addition? 18 plus 27. 18 plus 27.
45.
5.
Okay, class. Let's now confirm. Maybe our answer is correct. We have a 290. Down. We are compute for the down value. 125,000. 125 plus 94 plus 6. Don't forget we are working in million. Yeah, Ejo, answer.
270.
Eh?
Total assets 290. Okay, you done that.
Liability. How about liability and equity?
I'm having 270.
Ẹ ṣe dáadáa o. 125
Yes, it's 270. It's 270.
Which simply means that you have to quickly confirm something from the question you have done. Let's see. Are you sure the addition that we did in the first question here is correct? Confirm for me, is it correct? Oh yeah, confirm. 70 plus 20.
Is 90. 90, 102. Yes, it's correct.
Is that correct?
Yes, it's correct.
Okay, also confirm for the Modupe.
But do I confirm your figure now?
110, 100 plus 20 plus 30 plus 40 plus 10. Will you give me 200?
Yes. Yes.
Then 125 plus 30 plus 15 plus 30. What would that give me?
Sir, that asset of Modupe is 200. Is more than the equities and liabilities.
Let's just ask. 100 plus 20 plus 30
is 200.
plus 40 plus 10. That is 200.
It's 200.
So
yes.
Let's see the 125. 125 plus 30 plus 15.
It's 200. That one is 200.
Plus 30. It's also 200. That is correct. Then 80 plus 10 plus 5 plus 15. That is 110.
110. Yes.
20 plus 12, then plus 8.
Correct. Correct.
That is 110. So if that be the case, let's get all your workings and see maybe all our workings are correct. Step 1. So make sure you have not given me poison. Step 1. So I will have to start using my own calculator. 70 plus 15. That gives me 85. 70 plus 20. That gives me 90. So the difference is 5. Correct. Then we'll move to the next one. That is 20 plus 5 minus 85. That gives us 60, correct? NCI, that is 5. So we now have 5 times 0.2, that is 1, correct? Plus 1 plus 5, that is 6, correct? So Modupe, we have 30, so we now have 4. So we have 30 plus 4 plus 60. That gives us 94. So let's now get all our questions right. 100 plus 80, that is 180. 30 plus 10, that is 40. Then 10 plus that is 25. Then that is 45. So I now have 40 plus 25 plus 45 equals to 1110. Then plus 180, that's 290. So we have 125 plus 94 plus 6 plus 27 plus 18. 20. So where is the 20 hanging?
The
I hope,
20 is, can you hear me, sir?
yes.
The 20 is, if you calculate the total asset of Modupe is 200, while the total equities and liabilities is 180. It's supposed to be 200, 200. That was what I was saying.
Are you from the original question? Is it from this
From the
original
question,
question? Let's confirm.
yes.
Those that have calculator 125 plus 30 plus 15 plus
125 plus 30, 155. 155 plus 15, 170. 170 plus 30.
brother. Payable. Payable. How much is the payable? The payable you gave me, let me confirm.
Is
Plus, I think the figure you gave me is where I'm
okay.
having question. My payable should be 30 now.
Okay, sorry,
Not,
it's 30. Sorry,
boss.
it's not 10, it's 30. I took 10.
So, so the problem is from your calculator. So we have 38. So my now give me the right answer. 38 plus 27.
That's 65.
65. So
65.
can we now have 60 plus what we have is still is going to give us 290. Correct. Now, thank
Correct.
God, I'm very happy what you have observed now. Please, you should be very careful when you are solving the question. I haven't gone through all the exercise. You have gone through all those rigorous challenge of doing the double entry. Please, when you are not picking figure, don't pick the wrong figure. Any other question? Any question? Okay, class, if there's no question, I have sent something to your WhatsApp page. And that WhatsApp, I have questions. I think I have 3 questions there. And I also gave you something that looks like what you can use. Are you there now? To also have your own study and that. Okay. So I want us to be very careful. And I want you to know that there's success at the corner. So I want you to solve the assignment.